Okay, so let's get into this. So we've got this massive stack of sources.
Yep.
And I want to start with a question for you, the listener. If I asked you where the next truly global crypto supercycle is going to be born,
Yeah.
where would you guess? I mean, not just a speculative bubble, but a real revolution.
Yeah.
You probably say the usual suspects, right?
Yeah.
Silicon Valley, maybe London, driven by huge institutional money from the US or Europe.
And, that would be a perfectly reasonable assumption, except it's probably about 5 years out of date. It's truly fascinating, and all the research we synthesized for you today is this central, really audacious premise
Which is?
that the silent, overlooked contender that's rising so rapidly is the continent of Africa.
It's such a compelling idea because it just completely flips the script.
Yeah.
Our sources are suggesting that Africa might not just join the next wave of digital finance,
Yeah.
but actually become the dominant ecosystem, the real engine of it all.
Exactly. So our mission in this deep dive is to look past that old narrative, of Africa as just a recipient of technology, and instead focus on the drivers that are actively positioning the continent to be a pioneer. We're talking about 3 specific, really powerful forces.
Okay.
A unique demographic advantage, existing digital infrastructure that's, frankly, already world-class, and maybe the most crucial part, sheer necessity, the kind that drives innovation way faster than hype ever could.
So here's the core takeaway right out of the gate. Africa is young, it's digitally hungry, and it's building these decentralized solutions, not because they sound cool on Twitter, but because they solve genuine life-altering problems.
Yeah.
Like right now. And that combination of utility meeting necessity, well, it's proving to be unstoppable.
If you really want to know what the future of finance looks like, you have to look where the utility is highest. And right now, that's in markets where the traditional systems have they've failed.
So let's start with the absolute bedrock of this argument, which is demographics. This is the single biggest statistical differentiator globally. I mean, the youth factor in Africa is just staggering.
It absolutely is. When we talk about digital readiness, the adoption curve, Africa has something no other major region can match. The continent's median age is approximately 19. 19. Now, contrast that with, say, Japan, where the median age is pushing 50, or Europe and North America, where you're hovering around 40.
That is a tectonic shift in the marketplace. I
Yeah.
mean, we're talking about hundreds of millions of people who are entering the economy today and who have skipped the entire desktop PC era.
Precisely. They are mobile native and digital first. And this youth, it isn't just about numbers. It represents a completely different psychological profile when it comes to finance. They don't have this inherited trust in, central banks or physical branches that an older generation might have. They have a built-in expectation for peer-to-peer, instant mobile systems. They're basically fearless with new tech because they have lower switching costs and, frankly, less to lose than people tied to legacy systems.
And you can see how the speed of innovation just accelerates then. While an established economy is debating whether a new technology poses some systemic risk, this younger population is already using it on a massive scale.
It creates a stark contrast, and our sources highlight this beautifully. While the West is perpetually locked in a debate about how to regulate every little layer of blockchain, which just slows everything down, Africa is simply experimenting, building, iterating. They're meeting immediate needs. If a new protocol helps a merchant sell goods, they adopt it instantly.
The sources really pinpoint where that true adoption begins, and they're clear it's not happening in, quote, the boardrooms of New York.
No, not at all. The real start is much more grassroots. It happens, as the sources put it, in the hands of young people with ambition, a phone, and nothing to lose. And that ambition, which is driven by a need for survival and progress, that's a much more durable catalyst than speculative interest. That's the fuel for a real supercycle.
Okay, so that ambition and the lack of legacy trust, it brings us right to the second major driver, necessity.
Yeah.
We have to talk about the financial vacuum that DeFi is filling, one created by the failures of the status quo.
Well, the reality in many African nations is that traditional banking hasn't just been inconvenient. It's been fundamentally exclusionary. We're talking about massive friction points, high account minimums, long queues just to get your own cash, incredibly high fees.
The paperwork alone must be a nightmare.
Burdensome paperwork that keeps millions unbanked, and critically, systems that are just unreliable or, prone to political interference.
And when your traditional currency is vulnerable to hyperinflation, it's not just an investment risk, is it? It's an existential threat to your savings.
Exactly. Look, imagine trying to save for your child's education when your local currency loses, say, 20, 30, even 50% of its value in a single year. Crypto, and specifically stablecoins, provides an immediate, digital, reliable store of value. It instantly solves that problem. It's the difference between watching your wealth evaporate and having a fighting chance.
So this is where crypto really delivered. It's fast, it's borderless, and it's accessible to anyone with a smartphone. But what about the volatility risk? That's what the West is always debating. If they're seeking stability, isn't Bitcoin sometimes counterproductive?
That's a critical question.
Yeah.
And the sources show that necessity just trumps that fear of volatility. In many of these markets, the local currency is more volatile than Bitcoin. So if you have to choose between something that might swing 10% in a month and something that will lose 30%, well, the choice is pretty clear.
Let's get specific on the utility then, because it's more than just holding crypto as a hedge. The sources detail 4 powerful, practical applications.
Right. So the first 2 we've basically covered: saving money and protecting wealth from currency devaluation. The third one is massive: remittances, receiving payments from abroad. The average fee for that is still around 7 to 8%. That's millions of dollars just lost to middlemen. Crypto offers near-instant transfers for a fraction of a percent. That's money that stays in the family.
So it's not just financial inclusion, it's an immediate, significant boost to disposable income.
Absolutely. And the fourth utility is cross-border trade for small businesses. If you're a merchant in Nigeria trying to buy supplies from, say, China, traditional banking can take days. It involves huge fees, high failure rates. Blockchain payment rails cut that down to minutes. And this necessity-driven adoption is just exploding in places like Nigeria, Kenya, South Africa, and Ghana.
So we've seen the why, the necessity. But for this revolution to take off, you need the rails. And that brings us to what Africa already does better than almost anyone: mobile money.
This is the critical infrastructure advantage. They are not starting from scratch digitally. Not at all. They are world leaders in mobile payments. The user culture is profoundly rooted. We're talking about more than a decade of reliance on services like M-Pesa in Kenya.
M-Pesa is the legendary example, yeah.
Yeah.
Launched way back in 2007. I remember the skepticism. But it just redefined what a phone is. It's not for calls. It's your wallet. It's your bank.
Exactly. Millions of users are already trained. They're comfortable with digital payments through simple SMS or basic apps. They already trust the mobile ecosystem. So moving that trust to a crypto wallet or a D app, it's a much, much smaller leap. It's almost seamless.
Which significantly lowers the barrier to entry for decentralized tech.
It's the perfect synergy. You combine that existing, robust mobile money culture with full crypto integration. And the users are already trained. Crypto is simply the next optimized financial layer. And this places African tech pioneers in a unique position. They aren't waiting for Silicon Valley to send them a product. They're building the next layer of the global financial system themselves, right on top of their own homegrown success. They are the pioneers this time.
That transition from being consumers of technology to being the pioneers brings us to the builders. Because this isn't just an adoption story. It's an innovation engine, generating this new wave of development from hubs in Nairobi, Lagos, Cape Town.
This is where you see the difference in motivation just crystallized. While a lot of energy in the West goes to, DeFi yield farming or optimizing NFT marketplaces, which are fine but rooted in speculation, African developers are focused on solving fundamental social and financial gaps. As the sources stress, they're building not for speculation.
Okay, let's break some of that down. Because when we say blockchain payment rails or decentralized identity systems, it sounds like jargon. But these things solve extremely pressing human problems.
Take decentralized identity. So many people in rural areas just don't have reliable state-issued IDs, which means no bank account, no loan, no government services. Developers are creating digital IDs that are cryptographically secured, portable, and not controlled by any single government. That is real financial inclusion.
And what about those payment rails?
Those are the highways for money. They're building faster, cheaper blockchain networks to overcome those inefficient financial borders we talked about. They're allowing even small vendors to send and receive value across borders instantly.
We also saw mentions of crypto credit markets, which seems vital given how hard it is to get a traditional loan.
Absolutely. Traditional banks rely on credit scores that millions just don't have. So developers are using DeFi principles to create credit scores based on digital transaction history or collateralized crypto assets. They are providing capital to small farmers, to entrepreneurs, Money that lets them scale their businesses, bypassing all the bureaucracy.
This focus on utility must ensure a kind of long-term viability, right? When you solve a real problem, your solution sticks around long after the hype for some meme coin has faded.
That's the secret maxim we found running through the sources. Crypto that solves real problems always wins. These projects create genuine value through function, not just market sentiment. They're building for a market of 1.4 billion people who desperately need these tools.
Okay, let's pull back and look at the global implications here. The big argument is that the next supercycle won't just be driven by Wall Street adopting Bitcoin ETFs.
It completely reframes the driver. The driver will be global demand, new users coming online, and emerging markets that have this immense demographic pressure and foundational need. Africa, with its 1.4 billion people, is stepping into this digital future so rapidly that scale is just irresistible.
Right, but let's address a potential constraint. We've talked about mobile money, but outside of the major cities or those established corridors, is the actual connectivity, the energy access, is it reliable enough to sustain this?
That's a fair point, and the sources do acknowledge that infrastructure challenges remain. But the key insight is that adoption is happening despite these challenges, because the need is so great, and the technology itself is being optimized for low bandwidth environments. Solutions are being deployed that work on basic feature phones, not just the latest smartphone.
And the motivations driving this growth, they contrast so sharply with what we see in Western economies.
Just consider the core motivations again. The West is grappling with slow growth and is focused on regulatory protectionism. The African market is accelerating. And the fear factor is totally different. In the West, volatility is seen as the big risk of crypto. In Africa, the fear is much greater. It's the fear of being left behind, of staying financially excluded, of seeing your family's savings wiped out.
So the risk of not adopting the technology outweighs the risks inherent in the technology. That's a powerful driver.
A very powerful driver. And this is why the sources conclude that this is more than just a speculative wave. It represents a fundamental shift in global power, a redistribution of opportunity. Africa, so often underestimated in these discussions, is now positioned to become the heartbeat of the entire ecosystem. It's a revolution driven by pure utility.
The future doesn't always come from the places we expect. It comes from the places that are hungry enough to build it.
And this deep dive has shown us that this next revolution is being fueled by this exceptional confluence of three things: youth, existing mobile infrastructure, and just raw necessity.
It's a profound lesson in innovation. When a technology like blockchain is used not for speculative profit, but to solve real-world financial problems, its potential is truly unlocked.
So as we wrap this up, let's leave you with a final thought, one that comes directly from this focus on utility. If the most valuable and enduring blockchain applications are the ones built on real-world necessity, on a genuine need for survival and progress, then what does that imply for the applications and protocols you might be using in major markets today?
You really have to ask yourself, right, are those systems, maybe the newest DeFi protocol or NFT platform, are they built on necessity? Or are they built mostly on speculation and hype? And how might that core motivation influence their long-term viability compared to the ground-up, utility-focused solutions emerging from places like Nairobi and Lagos? It raises a really important question about where true long-term value is actually being created in this digital world.